the banking industry is undergoing a significant transformation. This shift is driven by the emergence of neobanks, also known as digital banks or challenger banks. Neobanks are disrupting the traditional banking landscape by leveraging technology to provide innovative and customer-centric financial services. These digital-first institutions operate primarily online and through mobile apps, offering a range of services that cater to the needs of today's tech-savvy consumers. Neobanks have gained significant traction in recent years, attracting millions of customers globally. Their rise can be attributed to several factors, including the increasing adoption of smartphones, the demand for convenient and accessible banking solutions, and the limitations of traditional banking models. Traditional banks, often burdened by legacy systems and bureaucratic processes, have struggled to keep pace with the rapid evolution of customer expectations in the digital age. Neobanks, unencumbered by these constraints, have capitalized on the opportunity to offer a more agile and customer-centric alternative. They have streamlined the banking experience, making it easier and more convenient for customers to manage their finances on their own terms. Neobanks are redefining the relationship between customers and their banks. Unlike traditional banks, which often prioritize product-centric approaches, neobanks focus on building customer-centric ecosystems. They leverage technology to personalize the banking experience, providing tailored services and insights based on individual customer needs and financial behaviors. One of the key differentiators of neobanks is their emphasis on user experience. Neobanks have invested heavily in creating intuitive and user-friendly mobile apps and online platforms. These platforms are designed to simplify complex financial tasks, making it easier for customers to track their spending, make payments, and manage their money effectively. The digital-first nature of neobanks allows them to operate with greater agility and responsiveness compared to traditional institutions. They're able to quickly adapt to changing customer preferences and market dynamics, constantly innovating and introducing new features and services to stay ahead of the curve. Neobanks have captured the attention of a new generation of customers who are accustomed to the convenience and speed of the digital world. Millennials and Gen Z in particular have been drawn to the seamless and personalized experiences offered by neobanks. These digital natives value transparency, instant gratification, and the ability to manage their finances on the go. Neobanks have successfully addressed these needs by providing real-time transaction notifications, instant account opening and access, and 24/7 customer support through various digital channels. By removing the friction from traditional banking processes, neobanks have made it easier than ever for customers to engage with their finances and make informed decisions about their money. Neobanks excel at providing a frictionless financial experience. They have eliminated many of the pain points associated with traditional banking, such as lengthy account opening processes, complex fee structures, and limited branch access. Customers can open accounts with neobanks within minutes, often without the need for physical paperwork or branch visits. Neobanks typically offer transparent and competitive fee structures, often charging lower fees than traditional banks for basic banking services. The absence of physical branches is not a limitation for neobanks. Instead, they have leveraged technology to provide convenient and accessible customer service through online chat, email, and phone support. The emergence of neobanks has shaken up the banking industry, forcing traditional institutions to rethink their strategies and adapt to the changing landscape. Neobanks have challenged the status quo by demonstrating that it is possible to provide innovative and customer-centric banking services in a more agile and cost-effective manner. Traditional banks have responded to the competitive threat posed by neobanks in several ways. Some have chosen to acquire or partner with neobanks, leveraging their digital capabilities and customer base. Others have invested in their own digital transformation initiatives, upgrading their technology infrastructure and developing their own mobile apps and online platforms. The competition between neobanks and traditional banks is ultimately beneficial for consumers, as it drives innovation and leads to improved products and services across the industry. Traditional banks are increasingly recognizing the need to embrace digital transformation to remain competitive in the evolving banking landscape. They are investing in technologies such as cloud computing, artificial intelligence, and data analytics to enhance their operations, improve customer experiences, and compete more effectively with neobanks. Many traditional banks are developing their own mobile apps and online platforms that offer similar features and functionality to those provided by neobanks. These digital channels allow customers to perform a wide range of banking tasks conveniently and securely, such as checking account balances, making transfers, paying bills, and managing investments. By embracing digital technologies, traditional banks can streamline their processes, reduce costs, and provide more personalized and responsive services to their customers. Neobanks differentiate themselves from traditional banks through their innovative features and functionality designed to simplify and enhance the banking experience. These features often cater to the specific needs and preferences of their target audience, such as millennials and digitally native customers. One notable feature offered by many neobanks is bill splitting. This feature simplifies shared expenses among friends and roommates, allowing users to easily split bills and track payments within the neobank app. Neobanks also often provide seamless foreign currency transactions, enabling customers to make international payments and manage multiple currencies within their accounts without incurring high fees. By leveraging technology to address common financial pain points, neobanks provide a more convenient and user-friendly banking experience compared to traditional institutions. In the ever-changing world of finance, the economic landscape can significantly impact the financial services industry, and neobanks are certainly not immune to these challenges. During an economic downturn, neobanks face several hurdles, including increased customer acquisition costs, higher loan defaults, and reduced consumer spending. To effectively navigate a downturn economy, neobanks need to prioritize financial stability and sustainability. This involves maintaining adequate capital reserves, managing risk effectively, and diversifying their revenue streams. Neobanks that can demonstrate strong financial performance and robust risk management practices are better positioned to weather economic storms. Moreover, building trust and transparency with customers is crucial during times of economic uncertainty. Neobanks that maintain open communication with their customers and provide reliable and secure banking services are more likely to retain customer loyalty. Trust and security are paramount in the banking industry, and this holds true for neobanks as well. Customers need to have confidence that their money is safe and secure when they entrust it to a financial institution. Neobanks have implemented robust security measures to protect customer data and prevent fraud. These measures include encryption, multi-factor authentication, and biometric logins. Neobanks also adhere to strict regulatory requirements to ensure the safety and soundness of their operations. By prioritizing security and compliance, neobanks can build trust with their customers and mitigate risks. Transparency is another important aspect of building trust. Neobanks should be upfront with their customers about their fees, terms, and conditions. They should also provide clear and concise information about their products and services. While neobanks and traditional banks are often portrayed as competitors, there are also opportunities for collaboration and coexistence. Neobanks can benefit from the experience, resources, and established infrastructure of traditional banks. Traditional banks, in turn, can learn from the innovation, agility, and customer centricity of neobanks. Partnerships between neobanks and traditional banks can take various forms. For example, traditional banks can provide neobanks with access to their payment networks or core banking systems. Neobanks can offer traditional banks their expertise in areas such as customer experience design, data analytics, and digital marketing. By working together, neobanks and traditional banks can create a more dynamic and competitive banking landscape that benefits consumers. The banking industry is constantly evolving, and the future of finance is likely to be shaped by continued innovation and technological advancements. Neobanks are well positioned to play a leading role in this evolution, as they are at the forefront of digital banking and are constantly pushing the boundaries of what is possible. We can expect to see neobanks continue to innovate in areas such as artificial intelligence, blockchain, and open banking. Artificial intelligence can be used to provide personalized financial advice, automate processes, and detect fraud. Blockchain has the potential to revolutionize payments, lending, and other financial services. Open banking, which allows customers to share their financial data with third-party providers, is creating new opportunities for neobanks to offer innovative products and services. The digital banking revolution is transforming the financial services industry, and neobanks are at the forefront of this transformation. With their innovative approaches, customer centricity, and technological prowess, neobanks are shaping the landscape of tomorrow's banking. While challenges remain, such as navigating economic downturns and maintaining trust and security, the future of neobanks is bright. As technology continues to evolve and customer expectations continue to rise, neobanks are well positioned to adapt and thrive in the ever-changing world of finance. The rise of neobanks is a testament to the power of innovation and the transformative potential of technology in the financial services industry. As we look to the future, we can expect to see neobanks continue to disrupt, innovate, and shape the financial landscape for years to come.